This meeting is being recorded.
Awesome. Good morning, everyone. My name is Monica LaCrue. I'm honored to be back with you guys today, hosting our third session with the North Central New Jersey Association of Realtors. The past sessions have been recorded, and I encourage you guys to go back and watch those if you did miss them. You know, at Freddie Mac, we feel that educating the real estate community about our affordable products can make home possible for more buyers. Today, we're going to talk about solutions for our aged housing stock and lack of inventory. And I'm joined this morning today by my colleague, Naja Fatal, who's going to do a deep dive into our products. So if you want to say good morning, Naja. Oh, you're on mute.
And now I am unmuted. Don't worry, I talk a lot. You'll hear plenty from me. So thank you so much for having both Monica and myself here with you. We're all about making home possible and talking about some of those solutions. So I'm glad to be here today.
Thank you so much, Naja. So, you know, the lack of inventory, the lack of affordability are definitely barriers for those in the, you know, on their home ownership journey right now for our current home buyers. You know, a limited supply of land, a shortage of skilled labor, and increased material costs are all contributing to both higher home prices and higher rents. More and more buyers are leaving the urban markets to search for more affordable areas, and the homes they come across are kind of in a little bit need of repair. The cost of living have left many baby boomers aging in place. And if they're anything like my dad, they're very reluctant to make repairs or updates to their home. Also, we're seeing many more natural disasters, and these products that we're going to cover today can be used to renovate or repair a property that has been damaged or may need some resilient upgrades. You know, at Freddie Mac, we offer loan products that promote renovation and energy efficiency improvements, and we want to introduce those products to you today. These products are solutions for some of the challenges that buyers are facing in today's market. So here's a little bit of an agenda for you. This is what we're going to be doing during our session today. We're going to start with an overview of the market environment. We're going to talk about the need for renovation products and the desire to learn about them and how they can help you reach more home buyers. Then we're going to do a deep dive into our products, Choice Renovation, GreenChoice, and CHOICEHome. And we'll close again with some of our Freddie Mac resources that are designed to help you reach more buyers. So now, according to Harvard's Joint Center of Housing Studies, 80% of the nation's 137 million homes are at least 20 years old. That's about 110 million homes that could benefit from home improvement. Additionally, almost 55 million homes are at least 50 years old, and they could definitely benefit from a significant renovation. Now, this aged housing stock is creating a remodeling boom. We also see a rise in shows like Fixer Upper or Flip Flop, or basically anything that you're seeing on HGTV. It's definitely driving up that desire to renovate. Everybody wants to be able to customize their home, add their personal touch, and renovation is a great way to do that. So the next few slides come from our 2020 real estate professional survey that we conducted a few years ago. We wanted to get a pulse on the market. We wanted to understand the trends that real estate professionals wanted to learn about. And we see here that there's a large desire to learn about down payment assistance programs and mortgages for our low to moderate income buyers. The desire for less seasoned agents, for those who have been in the business for less than a year, is pretty high. But across the board, we see here that even more experienced agents still have a desire to learn about these products. Our last session did cover Home Possible and Home One, which would definitely fall into this category. And this tells us that there's still a need to educate real estate professionals about our products and resources. We also see here that a fair amount want to learn about renovation mortgages. Some of you might be familiar with FHA's renovation products, but we want to make sure that you have the knowledge about our conventional loans as well. Knowing about this and different sort of products is going to help you prepare and help better equip you to help more buyers. Not everybody fits into one particular loan, and so we want to give you the resources and tools to be able to reach as many as you can. So from the survey, we also learned that some home buyer, some challenges that buyers are facing in today's market right now. we asked what potential home buyers were experiencing. And here we see that professional survey shared that the lack of options in their buyer's price range was overwhelmingly number one. Second to that was that their clients had an unrealistic expectation of what they could afford. Lots of buyers want move-in ready homes. They might want homes that they can grow into. So maybe if they're planning to start a family or bring in relatives to live with them as well. But those homes aren't always available, or it might not be what they can afford, and it's becoming harder and harder to find. Renovation products offer solutions to current homes on the market that can be molded into the desires of current buyers. So let's take a deeper dive into a few buyer profiles that we have here. Of the professional survey, those who work with more than 10% of first-time home buyers were asked some additional questions. Here we see that the challenges from the last slide were definitely higher for those first-time home buyers. 86% compared to 83 share that there weren't enough homes in the buyer's price range, and 44% compared to 43 had that unrealistic expectation. Also, 43% of them want those move-in ready homes. Now, we know that these property preferences are not available, so, are not always available for these buyers. And so as professionals, we need to make sure that we're finding solutions for these buyers. The products that we're going to cover today will help. While they might not solve for all of the desired preferences, they will paint the path to home ownership that is currently attainable for buyers looking in today's market. Now, this profile is for our low to moderate income buyers and very similar to our first time home buyers. They want move-in ready homes and they have an unrealistic expectation. I will share the link to the survey that we conducted with you guys. So if you wanted to do a deep dive, we do have some additional prior profiles. We do a deep dive into our diverse demographics, so our African-American home buyer, our Latino home buyer, as well as our AAPI home buyer as well. So you can kind of understand what their buying preferences are. It's really interesting to see what sort of insights the industry is experiencing and what buyers and how agents are, getting their industry knowledge as well. So I'll definitely be able to share that with you. So as I mentioned earlier, during our last session, we did do a deep dive into Home Possible and Home One. That event is recorded, so I encourage you guys to go back and watch it if you did miss it. But just a brief recap, Home Possible and Home One are low down payment products. For those who qualify, can get into a home for as little as 3% down. Home Possible is for buyers who make less than 80% of the area median income, and Home One has no income limits. Home Possible is for repeat buyers and first-time home buyers. With Home One, at least one of the buyers need to be a first-time home buyer. Also, mortgage insurance is cancelable on both. With low down payment products, the MI does stay, with other low down payment products, the MI does stay on the life of the loan. With rising interest rates, it's very important for us to look at options that have that cancelable mortgage insurance. That way, if they do need to refinance, they're not locked in at a higher rate paying that mortgage insurance for the life of the loan. I encourage you guys to reach out to your preferred lenders or some of our preferred lenders to see if your buyers will qualify for these programs. Sometimes I was at an event last week and a lender was sharing how a buyer had a high income, was able to put more than 3% down, but he wanted to hold on to some of those reserves because he wanted to be able to furnish his home or save for some sort of hardship that he might anticipate coming up next year. And so he was able to qualify with Home One and not deplete his savings and only put that 3% down versus the 10% that he thought that he would need. So I encourage you guys to have conversations like this with your lenders, with your buyers, to see if maybe not putting all of that down payment down is necessary for your buyers. So the products that we covered today, it gets better. Everything can be combined with these low down payment products that we just covered, Home Possible, Home One, and our HFA Advantage. So without any delay, I'm going to pass it over to you, Naja, and we can do a deep dive into some of our additional products.
Thank you. Okay, so to Monica's point earlier, right, when we opened up, we understand that it's so important to be able to, for us from a Freddie Mac perspective, to be able to share some of those insights. Why do we have the data that we have? Because it's important for us to be able to translate those needs into actual solutions. And from a Freddie Mac perspective, we have done the research and we've seen how there was a need for this particular program, especially if you look at some of the challenges that we're facing, some of the challenges that you're facing. We can't find the inventory. We have aging housing stock. So this is the kind of thing that's so important, not necessarily because as you as real estate agents have to necessarily understand every single point of this product, but it's important to always be having that hat of being solution driven. So we want to make sure that we have those solutions. And for that, we have the Choice Renovation and the Choice Reno Express. Those are two distinctly different products. And I encourage you to ask your lender partners, do you have these products? Because that is how we're actually going to be able to translate those into today's marketplace. So how do we use the Choice Renovation mortgage proceeds, right? So we can renovate or repair a property. It's important to understand it's not a construction loan. We want to be able to renovate or repair a property. And to our earlier point, if 80% of our inventory is more than 20 years old or more than 50 years old, we've got to really start bridging those gaps. So we can renovate the property. We can fund up to 6 months payments of principal and interest, taxes, and insurance. So there you go. You see, when you look at programs, to Monica's point earlier about HDTV, well, what do you do when you don't live in the house and somebody's renovating it? Well, we understand that you still have to function and you still have to pay for a roof over your head. So if your renovation is going to take an extended period of time, we're actually willing to fund that those 6 months of payments, so that you know that as the house is being renovated, whatever you're building, whatever addition is going in, that you have those 6 months in reserves that the payments could be getting paid. So that's an important piece. And I think that as we travel the country, that's actually something that comes up quite often. Well, what am I supposed to do? Pay for 2 houses, pay for a rental somewhere here, and this mortgage over there. So that right there is a game changer, in my opinion, because it comes up a lot. You pay the soft costs related to permits, plans, specification, draw inspections. That's what we call soft costs, right? That's important too, because a lot of times we focus only on, well, this project is going to cost $50,000 or $100,000, and those soft costs, those actually start adding up. If you look at some plans, sometimes they go upwards of $5,000. So all of that is all encompassing. Remember that, like I said before, every single bullet point that we've added to these products is because there is a need. And we want to take away whatever impediments might be out there for those consumers. So again, those soft costs are included in our overall calculations. The other thing we do is we pay for resiliency upgrades. That means retaining walls, foundation retrofitting, storm surge barriers, things that we maybe before it wasn't part of the renovation conversation. But we know that because of the climate change, and we know that because of our commitment to being as green as possible and as sustainable as possible, those are things also that we have added to those things, because we want to make sure that folks are able to obtain a home, but most importantly, retain a home. So when we're talking about upgrades, we want it to be a resilient home that you can be comfortable, that you can feel safe, and you're going to be in it for the long haul. So that's also another one of the bullet points. So can you get me to the next one? So we're meeting those evolving needs, right, with the Choice Renovation, just like we noted before. So finance is a broader range of renovations, right? Because a lot of times, especially traditionally, if you've been in this business a long time, you know that certain things were allowed and certain things were not allowed, and it was just very specific. And so we've opened that up because of the needs that we've uncovered, and because of the feedback that we've gotten from you. Right? You are out there really touching those consumers and really making sure that we are aware of those needs that are out there, hence the outreach that we do on a daily basis. So it allows renovation costs less than 75% of the appraised as is completed value. Allows renovations to rebuild homes to recover from damage caused by natural disasters, and improve a home's resilience for future events. So those things are important, especially with all the conversations that we have internally with all the climate change and all the natural disasters. So this is that go-to product. I happen to be in Florida right now, so this is a hot topic of conversation because the need continues to be there, fortunately or unfortunately, but it's one of those things that we are paying attention to. And it closes in a single transaction with a home purchase or a refinance. So for example, if you find a house that you want to purchase and that home needs those renovations, instead of you saying to yourself, well, let me buy it and renovate it later. Or in the real world, and I like to tell real estate professionals this all the time, in the real world, if you find one of those houses that's unfinanceable because it's missing this, that, or the other, usually that would go to an investment buyer, right? You would find an investor to buy the property cash, renovate it as best they could, and then resell it at a margin. Here we are very focused on being able to help that first-time home buyer, being able to help even somebody that's not a first-time home buyer, but that's going to occupy this property. So it allows you to actually purchase the property and have a single close to purchase the property and renovate, and then you are the owner of that property. So that is a really big differentiator, and I keep going back to HDTV that has changed our conversations. It was always for somebody else, and now it's for all of us. And it allows financing, like I said, up to 6 months PITI. So if it's a purchase, you know that you can buy the property, renovate it, and we're going to have in a separate account that 6 months, and you can go ahead and continue living your life and customize the home as you see fit. Now, eligible properties, I think this is really important because you can have a 1 to 4 unit primary residence. So if you have a duplex, a fourplex, incredibly important, you can use the Choice Renovation for something like that. And you can do a 1 unit second home. So if you're buying a second home and you want to renovate that, that works. A 1 unit investment property, that also works. A condo, big deal, right? Can you imagine being able to buy a condo? That is unheard of. If you can buy a condo, renovate it, and then purchase it, that's a game changer. Again, I live in Florida. We talk about condos a lot. And your manufactured home. A manufactured home, what? Yeah. So you can get a manufactured home renovated and know that you're going to stay there for the long haul. So all those things are incredibly important because they all have different price points, right? If you're buying an investment property, you probably have some reserves. If you're buying a manufactured home, your price point is probably a little less, as are condos. So this is actually allowing you to serve customers from A to Z. Because in this environment that we have this aging stock, it'll be very helpful for you as you go forward. And a down payment as low as 3%. So you can buy a condo, renovate it, come in with 3% down, a game changer based on that appraised value. So if you have a property that you're buying for $100,000, you're making $50,000 worth of renovations, we're talking 3% of that 150. Again, game changer. And the lender must obtain an appraised-based interior-exterior inspection on completion of renovations. So those are the things that the lender is responsible for doing. We want to make sure that we are putting in the right program in the right position, and that we have the appraised value to protect the consumer, the lender, and all parties. So if you can get me to the next slide. Eligible renovations. So this is when we like talking about this one because, like I said earlier, there were a lot of things that used to be excluded. But now we have a wide range of what those renovations might cover. Home repairs, improvements, resiliency, energy efficient features, including energy efficient appliances. That's part of the upgrade as well. We want to be able to sustain your property. So all of those things matter. Solar panels, things like this, again, improvements and resilience. Proceeds may be used only to finance renovation to an existing dwelling. Like I said before, it is not the kind of product that is a constructional. That is a completely different product. This is renovation. to raise existing structure and build a new dwelling. So we can't do that. Can't be a construction. And it can't be for personal property with the exception of new appliances. So personal property, yeah, it can't be for the backyard spa, but it can be for energy efficiency, energy efficient AC, uh, uh, the AC, the fridge, the range, things like that, that they're actually going to help you in the long run. It's usually something that stays with the property. And the renovations must comply with all applicable state and local laws and regulations, including zoning regulation. That's incredibly important because you have to have your permits, your approvals, and that will vary from time to time, state by state. Can I get the next slide? So meeting evolving needs with Choice Reno Express. So this one is a little different. This one is the time frame on the Reno Express is usually shorter, and the renovations are usually quicker and simpler, as opposed to that other picture that we just saw that the house was just the bones. In the Choice Reno Express, the Express kind of tells you as it is, it's going to be something shorter, not as extensive as the renovation. So the eligible properties on the Reno Express: 1 to 4 unit primary residence, right? That quad, that's also very, very good. Manufactured homes, including manufactured homes that are certified CHOICEHome. So the CHOICEHome, that is, I think, one of our better products that's out there, and it's specific for manufactured housing. And the comparisons, we're not going to get into too much of the details of the CHOICEHome today, but it's important to understand that manufactured housing is here to stay. And when we're talking about today's challenges regarding inventory, that CHOICEHome, when it is certified as a CHOICEHome, it's basically the same as a brick and mortar traditional home that we're looking at. So those are just built differently. So that is included. 1 unit second home, we saw that in the renovation. 1 unit investment property, and unit located in PUDs, condos, co-ops. All of that works for the Choice Reno Express, and it allows a small scale renovation financing. Upgrades like windows, doors, roof repairs, remodeling, things that are going to be a little bit smaller in scale, as opposed to having to put in reserve 6 months because your house is being gutted out completely. This one works a little different. It's for smaller things. It helps you contribute to improving home value and create affordable home ownership for more borrowers. And it allows you to deliver the mortgage to Freddie before the renovations are completed. So that's an important piece. I know I'm talking to real estate professionals today, but even from a lender perspective, I know that it's probably your experience that not all lenders offer these kinds of products because it's too tedious and they have to chase it down. And the Reno Express is so easy to manage that you're going to find more and more lenders offering the Reno Express because they could actually sell us this loan before the repairs are completed. So that may or may not make sense to some of you. I'm happy to take some questions, but you will see that more and more lenders are offering the Choice Reno Express, and then the really specialized lenders are offering the Choice Renovation. So those kinds of things, it's important to kind of differentiate. But it enables you to offer borrowers the ability to combine the renovation products, even with the Home Possible. So when we talk about that 3% down, you can do that on the Home Possible. You can do it on the Home One, which is a 3% down without income limits. So if you can combine a Home Possible, Home One, or an HFA Advantage to the Reno Express, that is an incredibly powerful thing because, again, we go back to today's current landscape. Aging housing stock, lack of inventory, and we have customers asking us to help them find solutions. Now, we sometimes talk about how the landscape is changing, right? Rates have gone up, the market is evolving. Well, in my opinion, my humble opinion, this is the kind of environment that even though it's slowed down a little bit, we actually have some solutions for our consumers. 6 months ago, these loans were not as popular, right? Because people were overpaying for properties and all kinds of madness was happening. But now we understand that we need all of these individual solutions to be able to help our customers. I think I had a question there and it disappeared. Monica, you have some questions there for me? I saw one pop up and it disappeared.
Yes, question. My buyer wants to put in a new septic. Will this product help with that?
Yes, we will take that. That'll work. And again, it's a great product for refinances and for purchases. We're sometimes not used to that because we're used to that mindset of, well, we need an investor to come and pay for it cash. And then, you know, all of that thing. This is a great opportunity for us to be able to help our consumers that are looking for an opportunity to be able to get these loans done. Can you get me to the next slide? Okay, so these are the benefits of the Choice Reno Express. You save time and money, obviously. Take advantage of longer terms as opposed to having to get an equity line of credit, or a lot of people that are still putting home repairs on a Home Depot card. So this is much more cost effective. So you're gonna save time, you're gonna save money. Longer term, lower interest rate for smaller projects versus using cash or unsecured debt. So it is really a game changer. And you skip the interim financing as opposed to having to buy and then get an ELOC and then refinance and cash out and all these other things. This is one loan. Close on a home purchase or refinance, Choice Reno Express in a single closing, very important, and pair with a low down payment option and offering like I just mentioned. Home Possible, Home One, HFA Advantage. Next slide. So this is where, I think this is probably my favorite slide, because a lot of times we talk about these things, but the numbers is what matters. So, and again, for anybody that has been in the business for more than 10, 15, 20 years, it's still so hard to comprehend, right? We are so used to that mindset of having to come in with the cash and how these loans are so burdensome, when in reality, this one here breaks it down. So let's say you find a property, for mathematical sakes, for $75,000, and it's pure bones. This is the Choice Renovation, not the Reno Express. So let's say you find a home that it's just the bones, $75,000. It's going to cost you to improve it $180,000. But this is exciting stuff, because if you're going to spend $180,000, it's exactly how you want it. This is customized. This is my to-do list. This is what I'm looking for. 180. Total acquisition cost, right? Improvements plus what it's costing you is 255. The appraised completed value is 250. We're going to take the lower of those two, right? You're only off by 5. So between the 255 and the 250, we're going to take the lower of that. The maximum allowable renovation cost, which is 75% of that 250. Don't get it confused. This is why this slide is so important, because it's 75% of that 250. Remember that 255 and that 250, we're going to take the lower. 75% of that 250 is 187.5. Okay, so that's the maximum allowable renovation cost, which is fine because we already know that our cost of improvements are 180. If it's going to cost us 180 and we're allowed to spend up to 187, we're good to go. And then we continue with the rest of this calculation. Maximum loan amount is 242.5. How did we come up with that number? Well, it's 97% of the 250. Please make sure that this one, you could probably just print this one slide and put it on your desk, because we sometimes get them confused. The minute that we say 75%, we automatically think you have to come in with 25% down. No, we just want to know that it's that 187.5. We put it to the side. Truly, it's 3% down of that full 250, 242,500. Borrower contribution for improvements, 5,000. Where did we get that number? Remember that differentiator between the 250 and the 255? You want to spend 180 because those are your improvements. That's fantastic. But the appraised value is a little off. So there's that 5,000 that's there. Borrower contribution for improvements, kind of out of pocket. That's your $5,000. but your minimum down payment is just that 3%, which is $7,500. How much is your total contribution? It's your 3%, $7,500, and it's that $5,000, that differentiator between the 255 and the 250. That's your cash, $12,500. That is your down payment. Does that make sense? Do I have any questions? I'm going to stop right there for a minute. Any questions, Monica? How did I do with that explanation as we broke it down? This
You
is
did
the
a great
this is
job,
the one slide we
'cause
need
we
to
don't-
print.
We don't see any questions, and we will make this available to everybody afterwards. I will be sending a PDF so that you'll have an opportunity to print it out.
Yeah,
and take a
because
look
we're so used to that 5% down, 3% down, but here we've got like 3 separate calculations going on, and it's important to kind of keep focused on it's a 3% down payment of your total costs. If you have any additional monies that you've decided that you really want the upgraded granite, I don't know, then that's a separate calculation. But this one really breaks it down for you. Okay, next slide. Okay, so, all right. Oh, so this is the example for a manufactured home, which I think is actually really important as well. So we have a property sales price for $75,000. Cost of improvement, $20,000. Total acquisition, $95,000. But here the as completed appraised value is 105. So you are ahead of the game. Before you were kind of, you had a little bit of a gap for 5. Here you're ahead of the game for 10. So you already have $10,000 worth of equity. So your allowable renovation cost is $50,000 or 50% of the as is. That tells you that $50,000 is the most you can improve. But we're good because our cost of improvements in this calculation is 20. So you keep moving. Maximum loan amount, 90,000. Minimum 5% down because it's a manufactured home. So it's a little different even if you go with Home Possible. It's a manufactured home, so you do need 5%. In this example, you are walking in with $47.50. Imagine buying a property at 75, customizing it with an extra 20, and you're only walking in with $47.50. Huge, huge win. So we need to start looking for these kind of properties and looking for these opportunities as opposed to there's not enough inventory, now what do I do? So this is a great solution as well. Any questions on the manufactured housing? Nope. Okay, Green Choice. See how we're getting all these choices, and it was so difficult to get these loans done in the market where we're coming out of. This time we're really looking to see, in Bergen County, we don't see houses for $75,000. I understand it's hard to find houses for $75,000, but if they are in need of repairs, sometimes you will. And this is, again, just an example. It's just a blueprint. It doesn't mean that you have to find a house for $75,000. It's just a blueprint. So the calculation is going to work with higher priced properties as well, as long as the appraised values work and the LTVs work. Can I have the next slide? Can we say the example with 300,000? So that's a great takeaway for Monica and myself, so that we can just add, since houses have appreciated as much as they have in the last couple of years. So that's a great example. If we just maybe change some of those calculations into some higher priced, right, Monica? Okay, so yes, sure, we can work on it. So that's a great takeaway for us. So thank you for that. But at the end of the day, did you know? Because this is what matters. What matters is that the calculation, you find a great lender partner that can kind of help you navigate through this. But what's really important is, as industry leaders in our communities, it's important for you to just take away the did you know, because as you encounter those potential consumers, those potential customers for you, for yourself, to help them purchase a property, it's important to kind of understand the did you know pieces. More than half of households' energy usage goes towards heating and cooling. So that Green Choice renovation is important if we can help them minimize some of those costs. That's exactly what our consumers and our customers want to hear. Energy and water efficiency improvements help lower the cost of homeownership and make the home more comfortable while using fewer natural resources. And the National Association of Home Builders' latest edition of What Home Buyers Really Want cited that energy efficient features among the top must-have of today's home buyer. So if that's what home buyers are looking for, we need to have a response for that. So can I have the next slide? Promoting energy efficiency improvements with Green Choice mortgages. It provides some streamlined financing. So the same thing when we were talking about the renovations, we need to give our customers some resources, some examples, some outlets. We know that this is what they're looking for. And again, did you know we can use these products? Finances the cost of eligible improvements, 15% of the as is completed property value. So that's a pretty high number, especially some of those solar panels can become kind of costly. So we can finance a big piece of that. It does require an energy report only if aggregate cost of improvements exceeds $6,500. So if you're going to do a big solar panel project and the house has a big square footage, we are going to require an energy report. However, if all you're doing is replacing your central AC and it's costing $6,500 or less, we don't require an energy report. If you're just replacing your appliances, it won't require an energy report. So that's important. It gives the lender $500 credit on delivery to us. So usually that $500 credit will translate back to the consumer. It allows a single closing and it lets the borrower pay off existing debt on energy efficient improvements. So if that customer decided and they didn't know that this was available and they went and put on a credit card, a new AC unit, this Green Choice will allow us to pay that off as a no cash out. So again, very helpful. Next slide. Energy efficient improvements, what does that even mean? So here it's listed some of those examples: programmable thermostats, caulking or weather stripping, adding ceiling, wall, or floor insulation. That's a big deal, especially up north. Air sealing, air conditioning, heating replacement to energy efficiencies, which one of the examples we just talked about. Solar water heaters, that's a big one. Low flow water fixtures, high efficiency refrigerators, freezers, replacement of windows or doors. A lot of just replacing some windows sometimes can be a really big game changer. And then the lender must obtain a copy of the acceptable energy report if those things are going to be done. So we will need an energy report to really ascertain, is it worth it? Is it really a savings to the customer? That's something that every single one of us really needs to understand. What does that mean as far as the saving of my energy? This is just responsible homeownership. As I said before, if you're going to spend $6,500 or less, then a report is not needed. Any questions? Are we good? Does this one work? In these loans before the purchase or after purchase? Oh, it could be for a refinance, it could be for the purchase. So if you decide that you're going to buy a property and this is something this is an upgrade that you would like to have before closing, it is a single close program. I hope that helps. Okay, next slide. And here's another calculation. So if you're buying a property, it's not the $300,000 example, but it's a $250,000 example. So let's say you're buying a property for $250,000 and the cost of improvements, right? This is, you are doing it for the sake of improving your energy efficiency. And you're going to spend $25,000. Total acquisition cost here, $270,000. Maximum allowable renovation cost of 15% of $270,000 is $40,000. Okay, you're going to spend $25,000, so you're good on this calculation. Next step, you look at your maximum allowable loan amount, which is $261,900. That is 97% of that $270,000 acquisition cost. It's going to take 97% of that is $261,000. Borrower contribution for improvements, $5,000. You know that it's only 3% down payment. you are walking into this home with $13,100. Does that make sense? Is that amazing for you to be able to buy a property, get your energy efficiency in order, and walking in with $13,100? How's that for an example? Questions on this one? Okay. Next slide. Next slide. Okay. So expanding support of the manufactured housing. So usually the types of factory built homes, we have the mobile home made before June of 1976, unregulated at the national level. Then you have the manufactured home built on a permanent chassis, meets or exceeds the HUD code, transported to the site, and affixed to the permanent property. That's how we define manufactured home. Those are the homes that we are able to finance. And then you have the modular homes, right? Those are certified to meet or exceed state, local, and permanently installed on the site. For the most part, when we talk about manufactured housing, this is what we're talking about. What is the average interest rate on these loans? Are you talking about the Choice Renovation, the GreenChoice? They are standard rates. They're standard rates. They might have some loan level pricing adjustments, but for the most part, these are standard conventional rates. So they're not, are there any points? It depends on what the market is going to be and where the rates are. Because remember that the points are there depending on the pricing. So if your pricing is on point, you don't need, there's no additional point charge because this is the product. So there are no additional charges because of it. Okay, next slide. Creating financing parity and site-built homes with CHOICEHome. So imagine, usually the challenge that we come across when we're talking about CHOICEHome and manufactured housing is that you have to compare those to other manufactured housing. So in this case, is as long as these properties are certified as CHOICEHome, we can actually compare those to site-built sales. So that changes everything, because sometimes there is an empty lot that has a manufactured house on it, but if it doesn't have anything to compare it to, usually traditionally we would be stuck. In this particular case, if there is a lot and there is a property there that has been built under the guides of CHOICEHome, then you can now compare that to a site-built home. And it, because it is now comparable, because it has been built in accordance to those standards. And I hope that kind of makes sense to a lot of us that continue to be challenged with the lack of inventory that's out there. And it widens home ownership opportunities. And again, low down payment options. So these are things, when we're talking about CHOICEHome, you're basically looking at a regular site-built house. Next slide. Is there a difference between manufactured home and CHOICEHome mortgages? Well, you can see them there side by side. So is it allowed for a second home on a manufactured home? Yes. For a CHOICEHome, no. Single or multi-section. So all of these things, when you compare them side by side, but if you look, they can both go up to, on the CHOICEHome, it can go up to 97%, right? Because this is basically a site-built home. And your regular manufactured home, it's a 95 loan to value. But it gives you kind of a side by side, because it's sometimes a little difficult to differentiate. Just know that when you're talking about a CHOICEHome, it's a home that has been certified as a CHOICEHome, because it's got some additional bells and whistles that make it more comparable to a traditional site-built home. Next slide. Again, changing the perception of manufactured home, factory built homes then and now. Look at what they used to look like. Look at what they look like now. A lot of these homes, I've personally been in some of these CHOICEHomes, and I can't tell the difference. And the reason that we can take them and compare them to other site-built homes is because they truly look like it. And that's what it, and I've been inside of them. I don't know how I haven't bought one yet, but those are the homes that they completely just look completely different. And you can see there some of those pictures. Next slide. CHOICEHome, creating parity. Look at the design pairings, right? So they have been certified. minimum roof pitch, low profile foundation. If you look at that particular property, that property does not look any different than a regular home that we are used to seeing. It must include one of these design pairings, the dormers, covered porch. You see those classifications we were talking about? If they fit into those classifications at time of build, then these are the kind of homes that we're talking about, CHOICEHome. Very, very resilient properties. And here, the energy efficiencies, again, interior features and finishes. When we're talking about that certification process, here, we don't want to get into too many of the details, but there they are, right? There they are, if they are specified in that way. Next slide.
Thank you, Naja. I can take it from here. Really appreciate you joining us today. If you guys have any additional questions, feel free to drop them in the chat now. I'm just going to close out with some additional Freddie Mac resources that are going to help you as a professional as well as your buyers. So here we have My Home. My Home is a consumer-facing website. It answers common questions related to home ownership. It's a great tool to use after an open house. You can send this to your potential buyers that visited your open house, allow them to kind of look at it at their own pace without ads. It has information for buyers looking to rent, refinance, avoid a foreclosure, maybe sell their home as well. It's great, pressure-free. Again, it has infographics, quizzes, videos, calculators that people can use to gain knowledge about the home buying process. So I encourage you guys to bookmark this and utilize it at your leisure. The next is our Affordable Lending Insights page. What we share here are the latest updates as it relates to what Freddie Mac's doing in the industry, updates on kind of where interest rates are going. We share thought leadership. This is a great website to bookmark. We have quick read articles that you can actually share directly to your social media pages so that you can remind your followers that you are the go-to when it comes time to buying or selling a home. And it shares upcoming information about future events that we have going on as well. So I encourage you guys to check out this page. And then we have our Credit Smart education. Credit Smart did get a little bit of a facelift right now. And so it is broken up into three buckets that I like to call. So the first is Credit Smart Essentials. This is financial literacy for all consumers. It covers, saving for college, saving for retirement, creating a savings plan, creating a budget. It also covers car loans, all the ins and outs about being financially savvy, about being a better money manager. This is a great course to give to maybe a student who just went off to college to make sure that they become, they understand the difference between debt, credit, and how to be, more financially savvy. The next is Credit Smart Homebuyer U. This is for buyers who are utilizing low down payment programs that might need homebuyer education. So first-time homebuyers, we all know that an educated buyer is a more responsible buyer, a lot easier to work with because they can anticipate the types of questions that their lender or you as a real estate agent are going to be asking them. So we encourage you guys to utilize Credit Smart Homebuyer U. It's free. It's also available in English and in Spanish. As soon as they do complete this, they do get a certificate that goes to their file ready for closing. So if you are working with a buyer who needs home buyer education, this is a free option for you to utilize. And then we have Credit Smart Coach. Credit Smart Coach is for you, the real estate professional. It's designed for you to be able to come certified to teach Credit Smart in your community. So this is a great way for you guys to start creating that buyer pipeline, right? So if you're hosting first-time home buyer fairs or educational events where you're educating people who maybe might be ready yet, but are interested in starting their homeownership journey, and it's a little bit, down the road in a few years or something like that, having them with this financial knowledge is going to make them a better potential buyer and a better homeowner. So I encourage you guys to visit our website and take a look at the upcoming dates for Credit Smart Coach so that you can become certified as well. And then the last resource is our Real Estate Professionals Resource Center. It's new, it's been expanded. This is all of our industry insights, our business growth strategies, resources that you can share with your clients. And it's all through the lens of the real estate professional. You know, a lot of people look at Freddie Mac and think, oh, well, that's for my lender, or I don't need to know that. I'm going to work with my lender. You know, having the knowledge base of these products and resources are going to help you reach more home buyers. Not everybody is going to fit into one product. And so with these webinars, we're hoping to expand your knowledge base about affordable lending products so that way you can help more home buyers. And so through this Real Estate Professionals Resource Center, we're giving you kind of that sort of lending knowledge through the lens of a real estate professional. So I encourage you guys to visit this website, bookmark it, sign up for our newsletter so that you're getting the latest and greatest from Freddie Mac. And with that, I thank you guys so much. I encourage you guys, if you want to break out your phone now, take a screenshot of this, fill out our survey. We want to hear about what you want to learn about. We would love your feedback and knowledge on this particular webinar so that we can kind of continue to develop new education and new resources that are going to help you reach more home buyers. We understand that the market is constantly changing. And so with us continuing to get feedback from you who have participated in our educational series is going to hopefully make us better in preparing our educational events for you. So I encourage you guys to please fill out the survey and provide your feedback on what you've learned today. So with that, I'm going to take one more look here at the chat. Yes, this was recording. We will make sure that we get a copy of the slides over to Ella here, and we'll make sure that you guys all get a copy of it. But with that, I thank you guys so much for participating. We do have a few more webinars scheduled with you guys to cover a few more products that we have here at Freddie Mac. So I encourage you guys to sign up and stay connected with us. So thank you, Naja, so much for joining with us today as well.